Cool. Thank you so much for joining, everyone. This call is being recorded for quality and training purposes. If you do wish for your video or voice not to be recorded, please obviously don't unmute yourselves or turn your camera on. And yeah, thank you so much for joining us today. So what we're going to go through today is Jodie, our Director of Professional Standards, is going to take you through how regulated professionals can also enable crime. So I will pass over to Jodie in a second. Any questions that you do have, please do just pop in the chat. I've got some colleagues in with me today, so we'll try our best to answer those questions. Anything that we can't answer or anything that we're not sure of, we will ask Jodie towards the end of the call. So I will put myself on mute and I'll pass over to Jodie. Thank you so much, everyone, for joining.
Thank you, Sujay, and thank you all for joining, which for a session which I hope's going to be an interesting one. It's a little bit less pure AML. Oh, thank you. It's a little bit less pure AML than some of the sessions that we have. So hopefully it gives a good sort of understanding as to how regulated professionals can enable crime, and also more importantly, how to avoid inadvertently doing so. So let's start off by really talking through what a professional enabler is, so that we know what we're talking about, because it can be a phrase that's a positive thing. You professional enablers, you can enable great things to happen through your profession and through the work that you do with your clients, but it's also got a slightly more sinister potential in this sort of sense that we're talking about it today. So in the context that we're talking about it, it's talking about a professional as an individual operating in a regulated industry. So much like yourselves being regulated for the accountancy sector work that you do, you're operating in a regulated industry. And in terms of enabling, we're talking about enabling criminality. So in some cases, that could be the underlying crimes, which we've got things like fraud, tax evasion, sanctions evasion, human trafficking, modern day slavery. So they're the underlying predicate offences that could be enabled in themselves. Or in other cases, it could be money laundering, so laundering the proceeds of those crimes that are the activity that the professional may enable themselves. So I thought it'd be useful to wind it back to, first of all, say, why would someone who's involved in criminality want to involve a regulated professional, someone that's obligated to report criminality if they spot it? And there are a couple of good reasons that they might do that. The first one is necessity. I suppose it's no coincidence that the key sectors that are at risk of facilitating crime are regulated. Think about banking, estate agents, legal, and the accountancy sectors, amongst others. Professionals that operate within them are obligated to be risk aware so that they can identify the risks of criminality occurring. They're obligated to report to law enforcement so that law enforcement can take that forward and deal with it. And they have to have processes in place in order to detect certain types of criminality. I mean, think specifically around money laundering and the money laundering regulations that apply to you. But that is not certainly a foolproof scenario, given the example of a property transaction, for example. Property transactions are often used as money laundering tactics or to facilitate other types of fraud and other types of criminality. You'd consider the amount of regulated sectors that have involvement in that. So there's banks, estate agents, lawyers, potentially accountants or trust and company service providers, TCSPs. They all are involved at certain stages of the process in a property transaction. So there's lots of due diligence, lots of oversight, lots of regulated professionals who have to be trained in order to spot the signs of criminality involved in that, and then have an obligation to report, as I said. So you think that kind of level of scrutiny across a property transaction would make it probably one of the most secure fraud and criminality-free transactions. But we know that is actually far from the truth. conveyancing or property transactions are actually very, very high risk and very, very littered with instances where they are used and abused to facilitate criminality. There's several reasons for that, and one of them is there's a good likelihood that there's at least a subconscious degree of expectation from the professionals involved in that chain that the others will have identified issues. They will think that the bank will have done their due diligence on funds that they hold. So they may place less emphasis on the work that they do when performing their checks. There's almost a strange risk that the more professionals involved, the less specific oversight. Oh, thank you. The less specific oversight that each will put onto that, and therefore overall there is an increased risk that the criminality won't be picked up because of that suspicion of sort of scenario of over-reliance. And that's actually been picked up in a recent OPBAS report that's been submitted in the last couple of days at the end of November. They did a specific piece of work around conveyancing and highlighted that risk of multiple regulated professionals being involved, increasing the chances of missed opportunities by this sort of concept of over-reliance. But there are also instances where people wish to commit crime that doesn't require the involvement of a regulated professional, but they still decide to do it as a sort of optional activity. So why might they do that? It's this added respectability that a professional comes with, adding what's called in the National Risk Assessment as a veneer respectability. So in deciding that they want to add this veneer of respectability to whatever their transaction is, there's a risk-reward consideration, and they'll be making an assessment of the capability of the professional that they're going to involve and the likelihood that they're going to be detected and reported. So the reward of veneer of respectability is that attraction of having your business or your transaction connected with someone who is a regulated professional. It might actually increase the chances of their fraud or their criminal transaction being successful in the first place because a regulated professional and their standing is attached to it. And it may also give a false sense of endorsement by that professional as well, that they're tied to your name and they're using you as part of their process. So I suppose if we take an example away from the world of accounting, something like buying a used car. If you buy it from a main dealer where you go in and you have a guaranteed history, there's performance condition checks that they, as a dealer, will put onto that. You're much more likely to place trust in that purchase than if you were just buying the car off of a person in the street, a private individual. However, that person in the street, that private individual seller, might say, well, this car comes with a full dealer service history. So they're trying to tack in again to the respectability of a known source, something that is trusted. And that's a process outside of the regulated sector. Car manufacturers are not regulated in the sense of finance professionals. And we know that faith is increased when dealing with a product that has been reviewed by someone who's trustworthy. So think about how when a regulated professional is involved at some point in the chain of transactions or the supply of services, how the outward view of that is considered by others. They're going to think that because you as a regulated professional has been involved at some point, and it doesn't always have to be full end to end, but if you've got some point of involvement, that potentially the whole deal that's being placed forward is verified and has had that level of oversight of a regulated professional. So when might regulated professionals become involved? It's really open to exploitation at every stage of the process. You can unwittingly provide services that directly enable fraud or criminality. You can potentially prevent detection after the event, or you can, as we know from the money laundering regulations, assist in the laundering of proceeds. Most legitimate services that are offered can be abused for the purpose of committing crime, concealing it, or facilitating the laundering of the proceeds of crime. There are some services that can be more open to abuse, and the National Risk Assessment of the UK considers that across the accountancy sector as well as other regulated sectors, specifically for the purpose of money laundering. So that's well worth a look at there. And you can pick out the particular services that they consider in their risk assessment to be of high risk. We know that the accountancy sector as a whole is rated as high for the risk of enabling money laundering, which is why there's such a drive to apply the money laundering regulations. Anything that increases the opacity of a transaction, anything like acting as a representative of the individual, that masks potentially the identity of the individual involved underlying. So you could be asked to act on behalf of your client potentially. It adds that veneer of respectability to the third party that they're dealing directly with a professional, or disguises who the underlying individual is. There's other things such as other services such as offering certification of facts. So when you're submitting accounts, you give immediate and widespread authentication to the underlying information, which is one of the real big things where people say, I'm just doing the bookkeeping. Bookkeeping is regulated. By presenting those books onwards, it may be to another accountant or to HMRC or to another individual involved, you're presenting that information as fact that you as a regulated individual has said this is true. So, I think there's often a case where people think, oh, just doing the bookkeeping, someone else will spot that further along the line. And that winds back to this kind of the earlier point that I touched on, where there's multiple individuals concerned. The accountant that you give that to further down the line will think that's come from a regulated bookkeeper who will have been obliged to understand what the risks are, to spot issues and raise them. If the bookkeeper is thinking, I think it's okay, surely the accountant will check it and they'll point out anything, then there's this missed opportunity, isn't there? And then there's other services such as TCSP. So some practices will act as TCSPs, registered offices, for example. So, again, there's completely legitimate uses for all of these, but they can be abused. So some people will want to register their office at a firm of accountants or bookkeepers, accountancy professionals, because it adds an extra reputable edge to them. If someone looks up where their business is registered, they'll see that it's affiliated with a regulated industry, it's registered to the same address. So let's have a quick run through which regulated professionals in the accountancy sector, of course, are at risk of exploitation. And in essence, all regulated professionals are at risk, but there are cases where there's an increased risk. So we'll look at those where there's a particular spike in risk of exploitation. First one is inexperience, those that are lacking in an overall experience, potentially in the startup sort of area. Those new in practice, newly qualified, are less likely to have an awareness of what is normal, what is usual business, and to be able to spot the kind of things that stand out as potential red flags. But you might have someone who is inexperienced in a specific field of business. That could be a business that a client does, a service that they're offering, or a transaction type of their client. So you might have someone who's a seasoned tax advisor, then asked by one of their clients to offer payroll, which they have absolutely no experience in. So they may be very experienced in one particular area, but asked to move out of their field of speciality. It's less likely that someone with a lack of experience will be able to identify something being unusual. They risk potentially having the wool pulled over their eyes by the person who's looking to exploit them. One of the best things that I think we always sort of suggest people say is, why me? Why has the client chosen me as a professional? Is it because, I am, the obvious choice, I'm brilliant, I've been referred, or is it because I lack the relevant skills? It could be that I'm geographically incapable of visiting them in person. For example, someone that's doing the books, why would you choose a bookkeeper who is hundreds of miles away from where your business is operating, other than potentially, I know that we work in a world where e-services are available, and that's a genuine reason, but is it potentially that they don't want you to drop by to their business to pick up paperwork or to see the trading because there's actually nothing happening, or it's not reflective of what they're giving you? The next risk would be external indicators of poor compliance or a lack of regulatory awareness. So you might be looking at outdated or absent processes, outdated references on your websites or public-facing material, use of old technology and processes being evident, or a willingness to cut corners on regulatory or professional standards requirements. They could come about at the point of your outward sort of media, websites, as I say, or it could be at the point of client inquiry, or at the point of onboarding even, where those are quite obvious indicators to a third party. The professional might be clearly unlikely to spot risks or uncover the kind of material facts that would indicate that there's criminality going on. So the individual wanting to use the professional might be willing to forego some level of professional service in their day-to-day sort of engagement with the practice in order to avoid the wider standards that go with that. So if you've got outdated references to old money laundering regulations, for example, they're going to know that you're probably not particularly shipshape when it comes to the money laundering regulations and all the requirements to go with that. So they could potentially run the risk of saying, let's go to that practice. They probably don't really stay on top of their AML work. They probably won't detect what we're up to. We'll be able to use them without detection. The next one is overdependence or desperation of a new business. So being overly dependent on income from one client, which can happen, particularly in the case of new businesses starting up, increases the likelihood that they'll be able to dictate professional actions. So a lack of willingness to exit a client might also embolden them and then put the professional in a position where they will not be able to, or where they will perform tasks that they wouldn't otherwise be comfortable with doing. In some cases, clients might be offering to pay over the odds for a service, and they'll expect potentially to receive favourable treatment in turn for that. So that's a risk that we need to consider within the practice. Being placed under pressure, and there's varying kinds of pressure. There can be time pressure, where a client provides information very close to their deadline. A professional might be tempted to skip inquiries that they'd otherwise normally make in order to make the deadline. The client's potentially relying on the professional, prioritizing the professional standard in relation to making that deadline and completing the service, and foregoing their wider professional responsibilities. And I am aware that a lot of clients provide things very close to the deadline without necessarily doing that, but it is a tactic that can be used. Or there could be confrontational or overbearing clients where some professionals are less able to deal with general client pressure, and the clients are more demanding and less willing to comply with additional inquiries, telling you that they're not going to engage with your request to provide them with CDD, for example, or brushing off your questions. about generally why has this transaction occurred? Tell me a little bit more about that. Have you got this evidence, etc. If they brush them off a little bit more quickly, and as a professional, you know that you're less likely to feel capable of pushing them on that, and you sort of turn the other cheek. Or potentially you've got people who are on the hook or being blackmailed as professionals, and this is particularly on being on the hook, I suppose, is one to be careful of, because once a client's got the potential to cause professional or personal disgrace from a minor discretion, they can then use that as leverage to get the professional to turn a blind eye or become increasingly active in facilitating their criminal activity. It's not entirely far-fetched. A lot of times people do that. If it's a corner cut, they do something that they know they shouldn't have done. It's a relatively minor thing in the first place. Before long, it's snowballed and snowballed and snowballed because they didn't want to be reported for the first minor transgression. Then we have a lack of professional curiosity, willingness to take absolutely everything at face value. Professionals that don't challenge or question in appropriate circumstances will certainly be very attractive for exploitation, because the criminal will just be able to say whatever they want, and it'll never be challenged or questioned, or any kind of difficulty around that will never arise. They'll just be able to say whatever they want. It'll be taken as read. The professional will then deal with it and pass that on as professional output, which will then be accepted further down the line. And then lastly, risk blindness. It's beyond not being aware of the potential risks associated with services and clients. And I'd say almost the opposite of the inexperience, where there's a false level of comfort achieved through over-familiarity, a reluctance to apply standards to clients who are potentially family members, friends, long-term associates, or they just seem like nice people that you don't really want to ask too many difficult questions of, because they wouldn't do anything because they seem very nice. Professionals then potentially start looking for answers on behalf of their clients rather than challenging them and facing embarrassment. No one likes to have difficult questions with people who are paying their bills at the end of the day. It is your job to do it, but it can feel uncomfortable and awkward. And so it's much easier to explain it away potentially on behalf of them rather than putting the challenge in. And then a last sort of section around that is where the professional has a limited view of the overall process. It can be sort of sometimes harder to detect discrepancies. And it's known as a tactic to segregate services across multiple professionals to prevent any one individual having full oversight. So if you just do payroll, or if you just do one element of the client engagement, and they get another practice to do another piece, and they get another practice to do another piece of work around the accountancy, and then they've got another professional, maybe they've gone to a standalone TCSP to get things, companies set up, etc. Are there genuine reasons that they're doing that, or are they trying to stop a one professional getting an overall view of what's going on? As I say, there are genuine reasons that they might want to do that. They might think that there's a tax specialist, a bookkeeping specialist, sorts of different specialists who are in at the best top of their game, and they want to do that. But it is also a position that you can be in if you don't have oversight over a good section of the business. But I suppose overall, I'd say that these risks where professionals are at risk of exploitation can be summarized by a general lack of risk awareness. So being unaware of these risks will certainly increase your chance of being exploited. So we'll move on to how regulated professionals might become involved. And it really runs through a scale from those who are complicit and corrupt, those who are willfully blind, and those who are unwittingly involved. And I'll pop those up there. So clearly, when a professional is complicit, they can enable criminality in the same way that any non-professional individual can, although the potential is that they can do that with greater ease because they can rely on their professional status. Now, there might be challenges in that because they're subject to greater level of scrutiny through regulators, professional standards, etc. But you'd expect that if they're fully abreast of what they're doing, they'd be able to detect, they'd be able to shield some of that from regulatory view. Willfully blind. So that's where you sort of choose not to ask the questions that might reveal difficult answers. And that sort of goes into a little bit of what I was just saying there, where it's just a little bit too awkward to ask people. Now, whilst someone doing that might claim to be unwittingly involved, the reality often is that it sort of veers into negligence to some degree, where you know that you should be asking questions and you think that it might reveal something that is going to be awkward, difficult, or something you don't want to hear. Then just not asking the question so you don't get the response that you don't want to have is really not appropriate. And you might consider that professionals who don't invest in appropriate processes within their firms, when they have a legal responsibility, could fit into that. Not building a proper AML compliant practice when there is a regulatory requirement for you to do so is a form of willful blindness. And then we move on to those that are involved unwittingly, and that this happens. The money laundering regulations, for example, acknowledge that there's no process that is going to be 100% foolproof. It's accepted that where a firm has made reasonable and proportionate efforts, their services might still be abused without detection. Just because you have the best services, the best controls and processes in place, and you're as risk aware as possible, ultimately professionals can still be duped. They can still be used by people who want to misuse their services. The people that will be trying to misuse their services are professionals in their own right, professionals in criminality, but they're often very, very good at what they do. It's their full-time job, and they're seriously invested in making sure it works, because if it doesn't, they're potentially going to get caught and go to prison. So the stakes are quite high for them. So they, as we've seen with a lot of stuff in the news, the level that these people operate at and the innovation that they run is exceptionally high. So it's entirely possible that you can really do your best, but still fall foul unwittingly. However, the important thing is that you do what's proportionately right to try and prevent that. So we'll move on to the potential impacts of professionality enabling criminality. Aside from the direct victims of crime, which obviously at the forefront of this, we have to consider that professionals enabling these crimes mean that criminality will continue rather than it being detected and disrupted by law enforcement. And money laundering is often considered, we talked at the start about different crime types, and there was fraud and human trafficking and drug sales and the like. But the money laundering side of that is often thought of in a kind of abstract concept, I think. It's sort of detached from the underlying crimes that drive the proceeds. Fraud and tax evasion and the like, many violent crimes and crimes that generate the proceeds of crime, they all feed into money laundering, and they all damage society and create countless victims. So successfully processing the proceeds of crime as laundered package not only provides direct wealth for those who are committing the crime, but it also enables a cycle of reinvestment by the criminals, and it enables those cycles of criminality to continue and to grow. So money laundering is really, really important for them to continue their process. There's always the chance that a professional involved in it might also become one of their victims, directly through the crime, or as a sort of a sidestep of that, they may fall victim of the crime directly themselves. And then you've got situations where the criminality is linked to the professional. And consider the reason that we touched on at the very start, why criminals might want to involve a professional. The reason is that they want to piggyback their professional reputation by associating with them. Having your reputation linked to criminality is going to be very damaging. It can be significant and have a lasting impact on your ability to have a professional standing. So it can be a massive issue around reputational risk. Potentially, if you're linked to criminality as a professional, there's going to be disciplinary action by a professional body. And in some cases, you may have find yourself involved in criminal liability, depending on the seriousness of that. And there's the money laundering regulations have got, when we're talking specifically about money laundering, ways that you can demonstrate having done everything that you should do to try and alleviate yourself from that burden as much as you can. As I said, in some cases, it's almost unavoidable that you will potentially be abused and used for enabling. But as long as you can evidence that you've done what you needed to do and you were required to do, you can reduce the potential criminal liability. Let's then look at how regulated professionals could mitigate some of those risks, because it's all been quite negative so far, how it could happen, but we need to know how we can avoid it as well. So risk awareness is one of the things at the heart of the issue. You can only mitigate against what you can see. If you don't understand the risks involved with your clients and the services you offer, you'll never be able to spot the abuse and the discrepancies. So by being aware of the potential risks, you'll be able to identify them as they arise in most cases. Establishing and maintaining appropriate controls and procedures. Whilst risk awareness is key, if you run your own firm, you need to ensure that you give yourself, and if you have staff, your team, the appropriate opportunity to detect and escalate those risks. It's no good just being aware of them, but then having no process within your day-to-day activities in order to use your awareness to detect them. Reviewing the processes once you've built them, and reviewing your knowledge as well. Risks change, businesses change, clients change, services change. The processes and knowledge that you have in place need to evolve with that changing landscape. Some businesses, some practices will change more quickly than others, but there's always change in terms of the risk landscape. It's easy to consider that as a tick box exercise, but really to make them worthwhile as processes, and it's your time as a professional that you're spending doing them, they need to remain relevant. And then using the opportunity to detect rather than enable fraud or crime. Through maintaining your professional curiosity, it's your name and reputation that you're putting on the line by working with each of your clients. You should feel comfortable with the declarations that you have to make. Regulated professionals operate in the space where they've got unique access to the details of their clients. As an accountant, not many people get to see the day-to-day goings on that you do as an accountant, as a bookkeeper, as a finance professional. So that opportunity on a day-to-day to spot the discrepancies, and then couple that with your requirement to report suspicious activity to the NCA because you are a regulated professional. I think it's important to stress that no one's expecting a professional to solve or understand the entire bigger picture of the criminality piece that they see, but you might be able to spot a single piece of the jigsaw, and by reporting that forward, that then potentially links up within wider reporting within the NCA, etc. And I suppose there's one, because it's always seems, always report your SAR. We're aware that there's this feeling that things go into a black hole and they never come back out, and it's not really doing anything. But there is a great example, I think, from a past criminal case where there was a legitimate business that lent its credit card reader to an organized crime group who was running a brothel. The brothel takings were all absorbed through this card taker into the legitimate business as income. However, the accountant was able to identify that the card reader was being used to take funds overnight in a period of time when that business, the shop operating, was closed. And the shapes of money being generated through there were not in keeping with the day-to-day operation of the legitimate business. And so they were able to flag that, and then subsequently looked into the use of that and abuse of that, and it went through successful criminal trial. So it can be as sort of, I don't say that's minor, but spotting something like that in your day-to-day business, where if you were potentially further down the line and not seeing the granular items of transactions go through, and you were just receiving an end of year balance sheet number, you wouldn't even potentially think to challenge that. You'd think that was a good year, and the underlying data would suggest that it's actually made up of things that weren't part of the legitimate business. And then one of the other it's a sort of self-protection, sort of concept is through SAR reporting and recording your rationales. So keeping evidence of having completed all of your appropriate regulatory requirements, things that you have to do, such as your CDD, your SAR reporting, recording justifications of decisions, rationales. They are your insurance policy for you. Should the worst happen and you do happen to be exploited for facilitating criminality, you have then the evidence that you've taken reasonable steps to act as a professional in line with regulatory requirements, and you can provide that evidence. Record keeping is a big part of the money laundering regulations. It's easy to claim that processes were followed if asked further down the line, but if you have no evidence to back that up, particularly if you're required to keep certain pieces of evidence, it can be much, much harder to prove that that occurred. So in all of that, how can we as the IAB assist? Well, as you know, we provide quite a bit of education and guidance, specifically around the money laundering regulations, but we also have some wider crime and risk awareness pieces as well. The sector as a whole is working on a fraud toolkit, the accountancy sector, and that will be coming, I think, in 2025 to help professionals identify and detect fraud. And we, in our role as a professional body, try to gatekeep the profession to make sure that only relevantly skilled and competent and people of good standing enter the professional. It is difficult because it isn't a regulated profession in the sense of being a protected title, but if you have an affiliation with a professional body, then there are certain barriers to entry for that. And in doing so, we uphold professional standards of our members. We also have quite a lot of work that we do across sector, not just within the accountancy sector, but across all of the professional sectors with law enforcement and with government, to try and look at how we can increase the effectiveness of the steps that are in place and being developed to increase the effectiveness of that tackling potential professional enablers. We're sitting at the moment on a professional enablers strategy working group, which is run by the National Economic Crime Centre, or the NEC, which sits within the NCA and with OPAS. And equally, there's other specific strategies that we feed into, for example, in the fraud space, the Economic Crime Plan 2, which is one of the big government pieces that has got lots of different interest, but particularly around economic crime, the fraud aspect of that. So we try to stay as involved as we can with all of those pieces to make sure that not only do you get the runoff of that work, but you're represented in your professional capacity within those conversations that go forward. And that really brings me to a close. So I think we've got a few minutes, Sujay, if there were any questions.
I don't think there are any questions in the chat, but if anyone does have any questions, obviously please feel free to either pop them in the chat or unmute yourself and ask Jodie while we're on this, please. Siobhan has just said, thank you, Jodie, very informative. I don't think there are any other questions. Thank you. Any questions for Jodie before we finish?
I'm sure any that come forward, they can email in Sujay, and we'll get back. I mean, it does sound a little bit doom and gloom, doesn't it, as a sort of topic? You know, beware. The important thing, I think, is to be aware that it is a huge risk. You know, you are, as a professional, massively at risk of exploitation, and there are a lot of very basic things that can be done to mitigate a lot of those risks. You know, risk awareness, and then building proper processes to make sure that you have the space in which to put that information and awareness to use is one of the real key ones, though, for me. But yeah, I'm sure you will have excellent AML specific policies, procedures, processes. And there's wider potential risks, though, that are out there, which is, I think, what we wanted to highlight as well as just being pure AML. Yeah, the risk of wider potential exploitation is there.
Thanks, Jodie. I don't think there are any other questions, so we will end it here. But thank you so much for doing this. And yeah, any questions, as Jodie said, please feel free to email in and we can get them answered by Jodie. Thank you so much, everyone. Have a good day.
Thank you.
Thanks.